All right, guys, we are back and raring to go. Hope you had a lot of time to go through trading. I see that there's some questions there and some things like that. So we'll go through that and take a look, check in with the markets and stuff. So obviously the markets here continue going higher, so I want to make some adjustments in terms of portfolio and all that kind of fun stuff. And let me do a quick sound check here, just make sure you guys can hear okay. That's always a... Yep, okay, so that's good. All right, so let's come here and go, okay, so on the S&Ps, or the S&Ps here. So essentially, I was talking about my line in the sand here is a 618 retracement. So we're essentially right there. And it's easy because I don't want to hold this if we don't close below here. But the question is, do I just GTFO now, or give it another hour and a half and kind of see what goes on here? The nice thing is, again, is when you have your plan and you choose your strategy, you can set it up to have as, I always like the idea of, like, if you're completely wrong, is minimizing the damage as much as possible. So if we look here at the SPX, so yes, I'm losing money on this, but it's not horrible. It's not like it's like, oh my God, this thing's a complete and utter disaster in comparison, with everything else. So that's the main thing, is that if you're wrong, you want to minimize the impact. And selling, and even with this, even though the call spread's down at 1810, I'm going to hold on to that call spread, and then just look to do with like some of the puts and things like that too. So that is, at this point, I'm going to assume that that trade is not going to work, but we'll give it a little bit more time as we go into the close. Yeah, Michael, I would always err on the side initially of just being conservative. As you guys are starting, as you're putting together trades and you're looking for different things to do, just err on the side of being conservative. That'll help you more. That'll help you more than just about anything. Let's see here. Okay, it is like boiling hot up here. Let me turn on the AC real quick. So, and we'll see. Obviously, it's like, this is kind of the line in the sand. We'll see what this thing can do into the close. Obviously, you've had a nice, after the initial sell-off here, you've had essentially a nice, very nice trend higher. Right about there. So we'll see what this thing can do into the close. Let's see here. Okay, going through there. Oh, so why do I have that apple on there 10 times? So what I'll do is, one thing that's nice on the radar is if you want to sit there and say, okay, let's see what the, let's see what the monthly squeeze is. If there's a stock that you trade a lot, then you can do the weekly, then the daily, and then, let's look at the 2-hour. Because a lot of times these are time frames that sometimes I'll just kind of forget to check, and it's good to do this like on the indexes. because obviously they'll drive kind of everything else. But this way it kind of gives you a nice snapshot of, let's see, format Apple. Five, and that's probably fine. But then the idea is you can just sit there and say, okay, on the monthly, weekly, daily, 4-hour, 2-hour, hourly, 30-minute, 15, and 5, what's going on in terms of squeezes. I'm just kind of going through here, see if there's anything interesting. So a couple things for today. Obviously, I want to see where the indexes are going to close, and then from there we'll be setting up some trades for next week. And let's see here now. I want to kind of go through and just kind of touch base with you guys on your homework, essentially, is what is going on in terms of questions and things like that for your trading plan. Time frame, I'll just change it, based on, like, daily is a good, that's a good one just to look at. You want to know what's going on the daily charts. And, if you want to put that a little closer here, so you can kind of see, what, it's kind of like, what are you looking at there? Let's just move that interval up. And now you can see that's the time frame that's being used. And let's actually take a look at a couple of daily charts here. I would like to set up some trades as we're heading into next week, and then let's look at let's get rid of some of this stuff here. So as we're going through here, NYMEX or NYC. So this is a good example just in terms of a squeeze, like as you're looking at patterns and stuff here and looking for trades to take. And one of the most important things to remember about the squeeze is that it is a continuation trade indicator. It's not a reversal indicator. So when you see a squeeze, you essentially assume a continuation of the trend. And here, even though it came down a little bit when I triggered short, as soon as the momentum shifted, bam, we went higher. Okay, same thing here, bam, we went higher. And then this was a nice squeeze. I really like to see this consolidation, then pop, and then we've got another one right here. So it's it's a little extended here, but all the exchanges are doing really well. So that's NYSE, and then of course you got CME, which we're already in, and then the other one is ICE. So right now in this this kind of a market where the nice thing about the exchanges too that I like is that even if the market does roll over, the exchanges do good because down markets produce more volume, so that's good for the exchanges. Let's see, what is BX? Blackstone. So that's interesting. Let's see here. Let's see if this is the right one here. For reversals, let me show you here. So, and then this is kind of like what I like to use to kind of look at the different markets and stuff like that. So you notice these are all daily charts, and what I like to look at here in terms of reversals and things like that, there's a couple things that are pretty important. And I don't want to complicate things too much because honestly, you can make a living just with the squeeze. When you get a squeeze long setup or when the squeeze is over, you can make a living with that. But a couple things you can utilize, 10 and 20-day lows. So like here you can see that price line sold off hard into the 20-day lows or 10-day lows. But what I'm looking for is when you dump into the, if you're looking for a pullback like this that holds, this is where you can do something like the RSI. It's like a 2-period RSI. And when you get a rally up into like the 20-day highs and it's overbought, usually you're looking for a reversal. Okay, but honestly, for the type of trading that we're looking at, this is more, I don't do a lot of setups on something like that, but it is useful. If something's falling, let's look at something that's a little more normal. So if we took a look at Apple here, you can see that Apple pulled back to its 10-day lows and is starting to rally, and that's actually pretty common. So it does give you some decent support levels and different things like that. The other thing that's really, really useful is, let's see, because really the main thing on this is you just want to be on the right side of the market. So a couple things that you can use for this is, these are called the waves if you're not familiar with these, but this is a way to stay on the right side of the market. Essentially what I like to do is, if I'm going to take a squeeze long, then I want to see the C wave, the B wave above zero, and the A wave turning above zero. The C wave is essentially, it measures the longer term trend on whatever market, whatever time frame you're looking at. The B wave, the medium term trend of whatever market, whatever time frame you're looking at, and then the A wave, the short term trend. And what's nice is this becomes a filter. Okay, so for example, if we go over here to CME and you want to look at the time frame that you've got the signal on, oops, and if we look at this, the reason this is a no-brainer long is that this is the kind of stuff that you want to find, is that, wow, the longer term trend is up, the medium-term trend is up, and the shorter-term trend is up, and there's a squeeze. This is what I call kind of like a turbo Porsche setup. So what you're going to do is, as you're doing your trading plan, you're going to have setups. There's going to be Pinto setups and Porsche setups. Now, if you look at this one here, this was a bad setup. You can see that you had, or no, where was it? Right here. So here's a squeeze, but you got the C wave below zero and the B wave above zero. Okay, so that's cross currents here. This one's pushing lower, this one's pushing higher. That's the kind of stuff I avoid. What I'm looking for is the no-brainer stuff. Okay, it makes my life a lot easier, is just looking at that. Okay, so let's look through. Gosh, what was another one that we were looking at here that was setting up? What will happen is, oh, cake, yeah. So this one, Cheesecake Factory, this is insane. I can't believe that people are eating this much cheesecake. But same thing, it's like when you see a squeeze, and when you see this, and as soon as you see the dots, you can start buying. Okay, it's a very, very nice, clean way to do it. Let me see here. Where's another one? Oh, these are all daily charts. So let's go through here real quick and we'll look at a couple of these. So now this makes it a lot easier in terms of picking trades. So if you look at Baidu here, the reason I'm not too excited about it at this point is that we have a squeeze. So this is what I do. 1, do we have a squeeze? So let's look right here. 1, do we have a squeeze? Yes. 2, is the C wave above or below zero? Okay, it's above. Is the B wave confirm? Yes. Is the A wave arcing back higher? Yes. And then the last piece is the weekly chart. Is the weekly chart also in an uptrend? Yes. This is a no-brainer trade, okay? And essentially what you can do, as soon as you see the momentum shift on something like this, that's where you start accumulating, okay? Buy Delta 70 calls, sell at the money, puts, okay? This is automatic. That's just, bam, bam, bam. So now here we are at a setup, and it's like, okay, here's a squeeze. Is the C wave above zero? Yes. Is the B wave confirming? No. Okay, so that's a little sloppy. And the A wave's not either. So if you're like on toss, it's okay. You can use the A wave on something like this too. So this is something that I'd be hesitant to do, honestly. So what you want to do is you want to be patient and wait for the no-brainer trades. Or on something like this, maybe I'll do one lot Okay, and this is how you guys can focus on position sizing. So on something like this, where it's not that clear, maybe I'm going to do 2 contracts. But on something like this, where I call a no-brainer trade, I'm going to do 10 contracts. And I think this is critical to qualify the amount of contracts you do based on the quality of the setup. And once you understand what a quality setup looks like, it becomes very simple. You don't really care about the news. You don't care what's going on. You just look for quality setups. Let's look at Goldman Sachs. That's actually got a squeeze on it as well. So you can see here on Goldman Sachs, earlier we were looking at this and I wasn't that excited about it. Well, you can see here's the wave. So the C wave, it's above 0 but a little sloppy. B wave is heading lower, and then the A wave mix. So this is a geriatric. Like it doesn't know what's going on. Why risk your money here? If anything, this is probably a good time to sell a straddle, but I'm not going to do a directional trade. I mean, like why risk it? So there's other things that we can do and we can look for. QIHU. This has been a very volatile stock. And if you look at what's going on here, again, not clean, okay? So you have, here's a squeeze, C wave is above 0, B wave is below. I mean, it's mixed. You don't want that, okay? You want to stay away from that. Let me see here on, but what's really powerful is when you get these on weekly charts. This is where you're going to make, these are the big trades, guys. Here's a squeeze. C wave's above 0, B wave's above 0. A wave is okay for it to be below 0, but you want to see it hook. You just start, buying calls. It's a weekly chart, so you're going to go 70 days out. All right. Oh, here's another one. Above 0, ascending higher, buy some calls. Okay, the stock went from $200 to $300. You don't have to do a lot of trades like this where a stock goes up 33% to make some cash doing this. But what you have got to do is you've got to save your bullets, okay, for this stuff. Don't waste it on a crap setup, because what happens invariably is that traders get all, they get bored and they get caught up in different things, and so they start doing big trades on mediocre setups, and then they're spending so much time managing those mediocre setups and worrying about those mediocre setups that they miss these setups. And what's going to happen, though, over the course of your trading is you're going to spend a lot of your time with small positions waiting for this stuff. This is where your account can take a big jump. But you've got to be patient. Don't take, be demanding. Don't settle for inferior setups. Okay, it makes your life very, very difficult. In fact, let me see what's setting up here on weekly. So I'm just going to change these to weekly. Oh, absolutely, yeah. This works in commodities too. And those voodoo lines are very powerful. I'm just going to turn them off though real quick. And it's good. Yeah, look at the moving averages. Those are. Let's see. Let's get that. Let's put on a couple there. So, we can look at, let's look at some commodities here. So, let's see, what was the one I was looking at? But it's the same idea. The nice thing is it doesn't matter, futures, Forex, it's like if you look at this stuff in gold, when gold, towards 2010, 2011, I was doing a lot of gold plays. Why? Because they were no-brainer setups. And you don't have to do futures. This is futures, but you can do this in GLD, which is an ETF. C wave's above 0, B wave's above 0. This is no-brainer trade. It's going to work out like 90% of the time. Okay. Oh, here's another one. Great. Here's another one. Great. When you get used to that and you start seeing it, then you're going to stop screwing around with mediocre stuff. Okay. Like here. This is a little mediocre, even though it worked out fine. You know, even though gold had a nice move here, look at this. C waves above 0, B waves below 0. That's, you know, if you're going to do it, you're going to do this with like one contract. You're going to do these with like 5 contracts, and that's the key. You know, you want to recognize quality when you see it, and then, you know, do that. One of the things you can do too, sometimes like with the waves, if we go back here to like the CME, one of the things with the waves is that they can take up a lot of room on the charts. So there is something, let's get rid of these here. Well, hold on. So there is something here that we did where these dots, all they do, that's nice, interesting. Let's see, at GC. Oh, hold on, these are off. So graph 1. Let's see here, I think. I know I can spell. Okay, so now so what this does is, if you want to save room on your chart, a lot of times what I'll do is just look at these dots. So all the dots do is just tell you what the waves are doing. So it saves you some space. So this is the C wave, this is the B wave, this is the A wave. And if the dots are down here, it just means that they're above 0. And if they're up here, they're below 0. So if you see a squeeze, okay, and you see all 3 dots, that means that the C wave, the B wave, and the A wave is above 0. So that saves a lot of time. If that makes sense. So then what you can do is, in the interest of saving space, is just keep those on there. So it's just kind of, everybody's different that way, but at least this way now. So now as I'm looking at this, I can just kind of see like, okay, you might like the waves better, or I'm fine with the dots. It just, you know, it saves a lot more, saves a lot of space. And then if I come over here and look at CME, you know, I can see here, it's like, wow, all the waves are above 0. Like I can just totally tell, and then now I can see what's going on there. So it's pretty good. Yeah, and if you go, they are available. I think some of these are available and some aren't, but I'll throw some, we can throw some links up at the end of this. All right, let's come back. I want to come back here and look at the S&Ps. Yeah, some of the TradeStation charting is really good. You can set up a practice account or just a small account like in TradeStation, just if you just want to use their charts and then take the trades. And then the other thing I really like too is the voodoo lines. These are just like some pivots, like support and resistance levels. They're pretty good in terms of offering kind of key support and resistance, as you'll see like throughout the day, like at, where's Google here? And these are actually pretty constant. Oh, Baidu. So the green lines are the second most powerful lines. The red lines are the most powerful, and you can see essentially that we've just kind of stared. You know, you've got, these are the most powerful, these are the second most powerful, and these are the third most powerful. And I mean, you can see that essentially, like, bam, we get here, we pop. You know, we pop again. get down all the way to the next level. We stay there for a little bit. And now we came all the way down here, and now we're working our way back up, spiked up exactly to this level. It's pretty crazy how they work because they're actually static. They don't change. Even in Tesla, you know, even during this bloodbath that it's been in, up from 180, you can see that, you know, it's like comes down. You know, it's just, it just respects these levels so much. It's pretty crazy. And then let me see, what else were we looking at? Starbucks. So on Starbucks here, you can see that huge level there at 81.15. So that'll be interesting to see how that goes down. And on the Dow, let me put a little bit bigger time frame on here. Let's see, S&Ps. 1751, obviously a really big level here in the S&Ps. And you can see we've just been kind of hugging this level as we can kind of consolidate and build up energy. But yeah, I mean, it's really, it's pretty fascinating. I mean, almost, you know, just kind of any market. Gold, you can see it's been kind of chopping back and forth here, bam. Well, yeah, and BIAB, I mean, it's been kind of a brutal pullback here, but it's within its parameters. I mean, you know, you've got, you know, it's right now it's holding its uptrend. You definitely want to see it hold that fire line. So this is, so, and again, kind of again in reviewing, like, you know, we went over stuff on Saturday and Tuesday about this, but what you can really do on this is, you know, like on crude oil here. So taking what we know now, so this is, crude oil has been coming down, but this is a super strong level, right? Well, now that we know about options, we're not, maybe not brave enough to buy crude oil there, but we could sell a put spread on USO, or in this case, I just sold a put spread on crude oil futures. So you just do the same thing, and just kind of, it's like, hey, we're getting to support, let's sell some options there, okay? And this becomes something where, and a lot of people always ask, like, gosh, I can't believe you don't look at the news, you don't do all this stuff. Like, you don't need to. Just kind of make your life fairly easy. Let's look here at Apple. Anything interesting setting up? You can see here 512 on Apple, really big level, right? That continues to hold. In fact, let's look at Goldman Sachs. So you can see Goldman Sachs, we've just been, remember the red line is the most important. Now we're just kind of pretty much stuck between two snow lines. And those are good levels to sell options outside of as well. LinkedIn here. You can see the fire line here. I mean, it's been respected. Now it's trying to chew its way through. And MasterCard, you can see here. So I guess, again, a few tools like this, and you want to kind of find, you know, what fits your personality best. But overall, what I'd be looking at is just, you know, focusing on ways to trade small, sell premium like we've been talking about, and then wait and be patient for the big setups. And when those come along, you know, having a plan in place for that, just kind of like what we were talking about before. All right. Okay, so let's see here. Yeah, I was surprised didn't get filled on MasterCard. Sometimes you just don't get filled, though. Okay, so a couple questions here. Stephen, question on the trading plan. I'm struggling with the level of detail. I'm detailing long, short, and neutral setups. It's multiple pages long with entry and exit criteria. Not sure if this will serve me well or work against me. Stephen, here's what I have found. I think it's a good goal to get your trading plan for each setup is 1 page. And as an example, you know, in something like this, I would just say it's a, and I've done many renditions of trading plans, and I've done the 20-page plan, but so, trading plan. And, it's going to, and you're probably going to have three main things. You're going to have like what I would call, let's just call it big setups, weekly and daily squeezes where everything is in alignment. Waves all above 0, etc. By delta assuming a long setup by delta. Let's see, so let's do trading plan. Let's do this for 125K account, max risk on each trade, 5% of account equity. And again, that's going to be different for everybody. I mean, that might be a little high, but it starts giving you guidelines to use. So, on something like this, that would be or $6,250. Now, the one thing you want to remember is that's kind of what I call the this is the oh shit amount. Okay. Remember, it's better to trade small and leave cushion. So what do I mean by that? Instead of buying 10 calls at $6.25 and risking the entire premium, $62.50, buy 5 calls and sell, 5 puts, 5 put spreads, etc. So what you're doing is you're putting the odds in your favor, because the reality of it is to hit max loss, then it's going to be a situation where, and the nice thing about spreads is you can actually manage that very easily. Naked options, it's a little trickier to manage that. Now, here's the thing. This doesn't mean you can't sell a 2 standard deviation put that is taking up 10K in margin. Okay? You can do that, but you've got to know your uncle point. Okay? On something like this, we know there is a 95% chance of it working out successfully, and we know we can defend it. So that's what you want to talk about. What you want to know is, if it's a day that's going crazy and things are really hitting the fan, what do you do? When do you cut it loose? Well, that's your oh shit number. If that makes sense. Okay, so on this would be like, so buy a delta 70 calls, sell at the money puts, sell 1 standard deviation puts. Okay, so that would be, bam, there you go. And that's your trade plan. And exit strategy. Start off with a stop loss of 2 times the 14-period daily ATR, average true range, on the underlying stock. Okay, so what does that mean? Because we haven't talked about that. So the average true range, like, so if we were going to say, we're doing a trade on CME, and it's based on the weekly chart, okay? So you always want to base it off of the chart that you're trading, and you're going to add the average true range and you can see it defaults to 14 periods. And here you go. This gives you a number. Your initial stop loss should be 2 times that. Okay? So when you get into CME, your stop loss is going to be 2 times 307, which is, 614. So if you got in at 77.50, what you're going to be looking for is you want to give it room, essentially, down to, what is it, 71.35 or 36 or whatever that is. Okay? Now this is how you position size, because first you want to give it, here's the thing, the reason you don't want to do tight stops. That's how you get destroyed trading. If you go 2 times the average true range, you're going to be outside of the noise. Okay? So what you're going to do then is say, all right, so if this is a $6 stop on the stock, okay, then you got to, okay, what does that mean on the option, et cetera, et cetera. What's going to happen is now you can actually calculate position size. So position size isn't going to be the same on everything. If that makes sense. So now you can sit there and say, okay, well, if it drops $6, then my option, if I have 10 contracts, delta 70, that's going to lose $4,000 or whatever it is. But you start off first with a logical stop on the underline, and then you start backing in contracts from there. So if you're doing like a Google and you've got to have a $23 stop, guess what? You're probably only going to be trading 2 contracts. Whereas with CME, you could be trading 10 contracts. Okay? It's a very simple way to manage your risk. And then when you're taking profits, so 2 times the ATR, that's your initial stop. And then essentially if you can go 1 ATR, that's a lot of times a good place to either take profits or move your stop from 2 ATR to 1 ATR. So if you don't have much experience in doing that, the average true range is an amazing tool for that, because it just keeps you on the right side of what's going on. And that's one of the most common questions I'll get is, gosh, where should I put a stop? Well, it's going to be different based on how much you're risking, but that's a good ballpark. If it's a weekly chart, then use the ATR value on the weekly chart. Move the stop from entry minus 2 times ATR to entry minus 1 times ATR. If the stock moves up 2 times ATR, then move stop to break even, if you aren't peeling any off. Example, CME. Weekly ATR equals 307 times 2 equals 614. If you buy calls when the stock is at 77.52, then you will be looking to bail on those calls if the stock trades down to 77.52 minus, and it doesn't have to be this precise, but you guys are getting the idea, okay? Conversely, if the stock rallies 1 ATR from 77.52 to 80.59, then move your stop from 2 ATR to 1 ATR. So move your stop from 71.38 to 74.45. If CME moves to 83.66, then move your stop to your entry point. Note, it's a good idea to take some risk off the table as these levels are hit, i.e. scale out and take some profits. Okay, so does that mean that's a general rule of thumb you could use for any market, any time frame. I would encourage you guys to stick with weekly and daily charts, but this will kind of keep you out of trouble for the most part. And you can combine this with, now the thing about it is that this is going to be, if you're selling premium, it's a little different. So if you sold, the 72.50 puts, and this thing moved down 2 times 2 ATR, you could still make money on this trade. So again, it comes back to understanding, the standard deviations and all that. This is a general, very nice strategy for managing directional trades. And then just kind of keep in mind that if you're selling premium outside of 1 and 2 standard deviations, you don't have to do that so much. Okay, but this is a fantastic way to manage any directional trade, because the idea is that your risk. First, you know your risk, and by knowing your risk, then you can create your position size. Okay. And then now you guys have the tools where you can, and you may not even buy options. Part of your trading plan may be like, what, I'm not even going to screw with that. I'm just going to sell premium. But at least now you know how to manage that, okay? Because this is a great trade right here. And if we look at this, there's a couple different ways to do it, of course. But, if we look at this as 1 ATR, and 1 ATR is going to take us to 80.59, and you can put these levels on here, if it helps you. And remember, these are guidelines. If you get a situation like, if you get a situation like this, and you're kind of like, well, gosh, there's a couple different things I'm going to look at here. I'm also looking at the prior highs, and I'm looking at the 1272 extension, and all that fun stuff. That's fine. This is kind of your, rule of thumb, kind of ballpark scenario where it's like, wow, you know what? We're at the prior highs, and it's pretty close to 1 ATR. I'm going to go ahead and take some profits there and move up my stop. So you don't need to wait till it goes to 80.59. Okay, if there's other, it's okay to get a little bit in front of it, and then. If it does break the 1272 extension, you know where 2 ATR is. It's most likely going to terminate here and not quite make it to the 1618. So, it's kind of what you feel comfortable with, but it's, and then you also want to have it to the downside too, obviously. Should you treat each position separately or look at the sum of all positions in applying these ATR rules? You can kind of look at the sum of all the positions, because here's what's going to happen, especially if you're selling premium. You're going to have less headaches selling premium. So remember, so let's say that what we did is instead let's say the only thing we did was sold puts. Then all this stuff is not as big of a deal, because essentially what we're looking for is that we stay high and just kind of grind higher, and then we continue to collect theta decay. Okay, that's going to be easier than managing. The thing about buying calls or buying puts in a directional trade is they work great when the market is working in your favor, and they're a disaster when it's not, whereas selling premium work great in either scenario. So you want to have aggressive trade management rules when you're long an option, and you just want to have some ballpark ideas when you're short an option. When you're short an option, it's more about defense, okay? And like what we talked about yesterday, so let's say that all right, so what about same trade, and instead of buying calls, we sell 1 standard deviation 7250 naked puts. Then what do we do? Well, so we know in this case that a 2 ATR move would take us down to 71.38. What to do? Initiate defense. Sell a new, so there's a couple ways to do it. We talked about this yesterday, but you could sell a new 1 standard deviation put from this price, okay? Look to leg out of the 7250 put and roll the credit into the new put that was sold. Can, of course, buy the $70 put to limit losses. So there's a couple different things like that, but a lot of times when you have these big moves like this, the nice thing about selling a put is you can kind of ride it out. You just want to see how much risk you're willing to take on that. And for those of you that are familiar with Carolyn's work is awesome for this stuff too. She's got great support and resistance levels. With Carolyn's work, one of my favorite things that I like to do is just selling, selling puts and put spreads below Carolyn's support levels and calls above it, and that's a great way to do it. Let's see. All right, so let's see what else we got here. All right, so let me see what questions you guys have now. This market's going to be interesting in the close. Oh yeah, for those of you that don't know, for those of you that are in here, I would highly recommend taking Carolyn's class if you are not signed up for it. It's like $97, and it'll teach you about all her levels. If you go to this link, if you haven't signed up for this, I would recommend it. Again, her work is really good. This is Carolyn's class tomorrow, and that link, you'll get it for like 97 bucks. That's like selling one contract for 97 cents. You'll pay for it. It'll pay for itself. Okay. So that's a good question too. So on the weekly squeeze on FXY, why didn't I do directional on this? This one, honestly, I just look at it and say, it's not completely obvious to me what it's going to do. I mean, you can see here, not all the waves are below zero. You got kind of mixed. Some waves are above zero, some are above, some are below. And I don't know if this thing's going to get destroyed or go higher. So this way, so sometimes if it's a mix like that, generally if it's an asset class like the yen, I'll look at doing that. Hi Sam, yeah, hi Sam, that's fine. Yeah, just call the office. They can hook you up. AZO, let's look at AZO. Oh, This is beautiful. Yeah, this is a great setup right here. So, yeah, let's look at this. That's an awesome setup. So what we're looking for here is, is the stock near its highs? Yeah. And this thing had the most amazing uptrend from here to here. So on something like this, don't fight. Yeah, that's right. Don't fight the BOJ. So this is awesome here on this find. Okay, let's see here. Okay, my keyboard has been lagging today. Let's see. So on something like this, I mean, I love this setup. So, one concern is always like, oh my God, it's so high. What do you do here? Do you wait for a pullback? You know what? When I see a setup like this, I'm willing to take the heat. So that's where position sizing comes into play. Just do smaller position size. Ideally, on something like this, I would have been alert. I would have been alerted to this here. But you can't see. That's one thing that I like about the trading room is you get everybody on the same page, and then everybody's looking at different things, and people can be like, hey, did you see AutoZone? It's like, oh my God, that's awesome. So ideally, I would have gotten it here. But you know what? This is still a completely valid trade. And so the first thing I'm going to do here is exactly what we've been talking about. Remember, this is a weekly squeeze. It's going to last 8 to 10 weeks. If I'm going to sell premium, I'm going to sell it a little closer in. So the 440 puts are 8 by 820. Wow, that's fabulous. So let's sell. Well, so this is kind of the at the money. So the first thing I want to do is I want to sell an at the money put. So I could sell the 450. But that's got a little bit of intrinsic value in it, which is fine, by the way. It's actually, well, it's only $2. So I'm going to sell that one. So again, this is part of my trading plan. I don't even, I don't even have to think about it. I just want to see how much margin that's going to take. 57, not horrible. Let's see. So I could do that as a spread. Let me see what this looks like as a wider spread. So $57,000 at 450. What happens if I do a $40 spread? So I'm getting about a similar size credit, but let's look at the buying power. Boom. So the buying power is cut in half. So that looks good. So now that order is working. And the nice thing about it is, and kind of the, if there's a secret to options trading, is that if you're in a position where you feel like you're chasing, all you need to do is sell premium, and then you can buy the calls on a pullback. So if we look at this on AutoZone, if you're thinking like, gosh, I would like to try to buy a pullback. That's all right. So you don't need to do. I just got filled on that trade. You don't need to load up. Oh gosh, that's a beautiful setup. What you might do is say, all right, so here I'm going to sell, I'm selling the puts, and then see if it pulls back, then you can add the calls. So, and that's perfectly fine. This is a beautiful setup, though, okay? Smiley face. But that's the, to me, according to my trading plan, that's the no-brainer trade. Just sell, I just sold a put spread, and now I can just start, now it's on my radar, and I can start kind of legging into other positions. Yeah, and let's look at the waves on this too. The B wave should be ascending. After a while, you kind of know what they're going to look like. So on the daily chart, they're all fine. So the B wave here, you can see that it is above zero. It just recently hooked higher, and so did the A wave. So everything looks fantastic there. So good find. All right. All right. So now we are getting into okay, so good question. So why did I do a 40-point spread? Well, I wanted to sell it naked. So what I was going to do is I was going to do the 450 put naked, but that was going to take up $52,000 in margin. So all I did was I added the 410 put, and that reduced my margin by half. So that was just a buying power. So that's one thing you can do is when you're selling, essentially selling naked puts, you look at doing like a wide spread. Obviously, I don't want that to go, I'm not willing to have that go 40 points against me, but I was going to sell it naked. By doing the spread, that's not a risk control measure, that's a margin control measure. Well, no, remember, you're going to sell premium closer in. Okay, now if you're going to do a directional trade, then you're going to go further out. So now we can go look at, say, January for potential directional trades. Now, one thing about this stock, though, that I don't like is that, if you go and look at a Delta 70 call, they're like $26. So it just kind of depends, how much buying power do you want to take up? And that's kind of a question, too. So remember, if you're buying options, you want to go further out, and when you're selling options, come closer in. And you could actually sell, look at the next week as well and say, oh, expected move, $8, so round it up to 10, 447 minus 10, 437, 435. They don't have that. But yeah, you could sell like the 440, 430 put spread, or even just the puts. Let me see what they do here. So that's a lot. That's a lot of buying power. 57 grand. I mean, it's a big stock. So on something like that, again, I just kind of weigh it against the buying power and say, well, let's do, that's great that they want to take up all that money, but let's do a $10 or even a $20 wide spread, not for risk control, but for buying power. And now, instead of $57,000, it's $18,000 in buying power. And there we go. Yeah, so in the same thing, so everything we've been talking about this week on this setup, I mean, you guys can just knock it out, okay? So every setup that you're going to see, these are the questions that you are going to ask yourself, okay? You're going to look at something like this and say, okay, bullish setup. And generally, your choices are buy out of the money calls, no. Buy in the money calls, mostly no. Possibly. Again, this is going to be part of your plan. Sell at the money puts. Sounds good. Sell one standard deviation puts or put spread. Absolutely. Sell 2 standard deviation puts if the premium is there. So what you're going to find as you're going along is that on any bullish setup, no matter how good it looks, this essentially is going to be your best bang for your buck. Because with this, you can be wrong and still make money. So what you want to do is you want to construct your trading plan around these choices and say, okay, do you just want to do that? That's going to be your highest probability bet there, or do you want to sprinkle it out? Now, I'm a little bit more aggressive, so I'm fine. And I say, and 9 times out of 10, you're not going to buy out-of-the-money calls. The exception to that would be a cheaper, like SLV weekly squeeze or something like that. Then it's okay. But what these are doing is it's a combination of, and what you want to evaluate is you've got probability, risk, and margin. Margin to like return, essentially. So probability, that's low probability. Low probability, it's low risk because it's not a lot of money, but low probability, so it probably won't work. You could buy in-the-money calls, probability medium, okay? Risk is higher, and then the margin is comfortable, and then on and on and on. And as you go further down, the higher the probability of these trades are. So this is part of your trading plan that you want to figure out is, okay, as this stuff is coming up, how do you want to do it? Now, the setups that we talked about yesterday was more, along the lines of, if you guys remember this, when the squeeze runs out of momentum, that is easy. That's just a 1 and 2 standard deviation sell, okay? That's the 35 to 50 days out. I'll do that all day long. That's easy. The question becomes, so you've got essentially 2 situations here, and it's one, when the squeeze triggers, what do you do? If it triggers long, your highest probability trade is to sell puts, okay? So just understand that. If you want to try to get a little bit more bang for your buck, buy some calls, but your highest probability will be selling puts. And then remember, when the squeeze is over, that's your highest probability trade, and that's where portfolio margin comes into play. That's when you sell the 1 and 2 standard deviations, 35 to 50 days out. Oh yeah, no, I love Raymond. I love at the money puts. I think they're great. Well, so for us, so when I say that if the premium's there, sometimes you'll go out 2 standard deviations. It's like 10 cents. So you just want to see what's the what's the risk. Do you got to put up $20,000 in margin for 10 cents a premium? So I generally like to see at least 25 cents. All right. All right, guys. Okay, let's take a quick break. We are, wow, it's almost 2 o'clock. Time flies. Okay, here, let's see. Let's see here. Okay, so break 155 to 210, back. All right, guys, take a quick break. Back shortly. Well, Jared, you just hit the nail on the head. You guys don't need a lot of tools. You can make a living with the squeeze. So that's kind of yeah. So all right, we'll come back in 15 minutes. Okay, let's knock this out. Where are my glasses? Okay. So what we want to do here is yeah, the index options, they expired yesterday, so we got max profit on those. So probably the main thing here that I want to look at is on the S&P, on S&Ps. All right, so the main market I'm going to be watching into the close is just the S&Ps. We've obviously had a nice rally. Where is the ticks? They're not on this page. Awesome. Okay. Well, let's change that real quick. So this will just kind of give us an idea of the buying and selling pressure into the close. All right, so hey guys, all right, we're gonna get into the last 45 minutes here, and we're gonna see what this market is kind of made of. What's interesting is that the big moves today was the dollar index, and dollar index going higher, bonds going lower, and gold going lower. Those are kind of the big moves. Now, stocks, of course. So essentially, the idea that there's the potential of tapering, dollar is going to go higher, bonds and gold will go lower. The yen could go either way, depending on how what's going on in Japan, and then and of course, if there's going to be more quantitative easing, it's the reverse. Dollar goes lower, bonds and gold go higher. Okay. So then the question becomes, well, all right. So what happens to stocks? Well, in this case, stocks just go up. They don't care. They don't care if we are going higher or lower or what have you. The stock market is just going higher, and that's just what we have. So one of the things that I was looking at this week is to see if some cycle lows could come into play. If some cycle lows would come into play. But for that to happen, we'd actually have to close below 1747. We're currently at 1759. Unless there's some huge sell programs that hit into the close, that is not looking like it's going to happen. Okay, so when that happens, the cycles come and go, and everybody moves on with their life. So let's put this here. So one of the trades, I want to set up a couple of trades for next week. One that I really like here, so we talked about AZO. You have a pretty sweet squeeze setting up here. So on this one, just want to go a little bit further out here, setting up a little bit more conservative strategy on this one. We just had set these up. So we got the, now this thing is a big stock, so it takes up a lot of buying power, so I ended up doing these as spreads. But essentially, what I wanted to do is sell an at-the-money put. So I sold the 450 put. I wanted to sell it naked, 42 days out, but the margin requirement was like 60 grand. So what I did is added the 410 put to it just to offset the margin requirement. I'm not interested in losing 40 points, but I was going to sell it naked, but that way it just offset the margin requirement. And then for next week, did one standard deviation, the 440, 420, same thing. I was looking at doing that naked, but the margin requirement was insane, so added the 420s to offset that. And you can see that those are only, it's a little bit of insurance for 18 cents there. But I really like the setup, so that was a good find. I'd like to do, let me post that too. And then for CME, the main thing on CME we did here was just added CME acts great. Just added an additional call 133 days out. So the puts here that we sold continue to do fine, and kind of see how that one does there. All right, let's see here. Yeah, that is good. That is doing that. So let me post those real quick. And then for CME, oops. Where did it go? Oh, there it is. And so for CME here, it looks really solid. And so AZO looks pretty solid too. So for CME, I mean, this is about as textbook of a setup as you can get. The main thing here is that there's a zone between the 618 and the 782. That's your entry. And you can see the 618 well, right in here and right in here. So once you kind of get through that 786, you're pretty much done. So, but you can add positions in this zone. And then if we can get through this, what we're looking for is that 1272 extension, which is about 82 bucks. Also, one average true range from here would be 80.59. So those are just some potential targets. AZO is the December options. Yeah, and there's two ways for doing spreads. There's the one is to do scans for let me see here. So if we do a scan, so on something like this where we got the last, we're gonna scan. Let's actually scan the Nasdaq. Well, S&P 500 is fine. They have weekly options, $20 or higher, million shares. Actually, I don't think we don't need a million. And then the IV percentile between 65 and 84. Let's scan this. So Cisco, FedEx, those are pretty good ones in terms of implied volatility in the upper part of its range, earnings and stuff like that. But the nature of the squeeze, and honestly, a lot of like market makers don't really understand the squeeze at all, which is great, which is what gives us an advantage, is that when you get to the end of the squeeze, implied vol is still high. So here is where the implied vol is quiet. That's why you buy options when the squeeze is forming. Here, implied vol is actually high because people are anticipating that the move is going to continue, but we see that it's done, and this is the point where you sell. That you can just do that all day long. It's just a fantastic thing to do there, and that's the 35 to 50 days out. All right, so CME there looks pretty good. Ticks coming back up again, so the market here is still holding up into the close. Let me take a look here at crude oil. Yeah, well, yeah. Today I'm not going to do a ton of stuff. It's really as we go through and just kind of look at managing different trades and things like that. Let me see here. What I do is just kind of it's establishing which ones are expiring, obviously, and a lot of these are. I mean, we did a lot of earnings plays here. Now the main thing today that I want to watch is that I had set up some semi-bearish positions on the S&Ps, and I did this by doing call credit spread. So what I'm going to do is I'm going to take off the long puts here, and then but I'll keep the, let's see, what is that one doing? Where are we? 17. Yeah, okay, that's fine. So the 1785, 1790 call spread, that's still going to get max profit. The 1810, 1830 call spread that expires in 35 days, I will keep that on, but I am going to dump the put. Buying this put, the premise was that the stock market would roll over and die, and it's not. So that's actually very simple. We just get out of that one. Let's see, send. And then let me see, what else did I do that on? Spiders. So same thing here. So again, the idea with this is that I wanted to get some light exposure in case the market did completely tank. It's not. So now I'm just getting rid of those. Okay, so that's cleaned up. And let me see what else here. Well, yeah, the main part of the cycles were this week, but they actually do have a potential into next week, early next week as well. But the market, I mean, we'll just, we'll know a lot more by about Tuesday. Let's see, /ES. All right, so what I'm trying to do is I just want to kind of clean up here. So we got AZO. So what I'm looking for is this is just trade management, into Friday. These are all 7 days out, 42 days out. So holding on to those, that's fine. Baidu, these were puts. We did a put spread. We bought those back. That's fine. VIIB, it's nothing there. I'm just kind of going through, making sure there's nothing, nothing that I need to do here. That's fine. See me, it's cruising right along here. FXY, this one's going to be interesting. Just continuing to hold the straddle. This thing keeps getting banged around here. And then Google. Put there. Nothing in the money. So really just kind of looking at potential assignments. So here we go. So the Groupon, this is from earnings. So Groupon's at 10.06. For earnings, sold the straddle, the 10 call, and the 10 put. That's obviously worked out really well, but we're also right here at these levels. So I do want to try to get out of these at a nickel. So let's see if we can get out of this one for a nickel. All right, that order's working, and now I'm going to do the same thing on the put side. Now, what I like to do then is if there are orders that are working, I just leave this open. Okay, that way I know that that's still working. So Kohl's, we sold the puts. That's fine, 42 days out. LinkedIn, this is an Iron Condor, expires today. And it looks like at this point we'll be getting next week. So nothing to do today. NDX, we got max profit on that, expired yesterday. Priceline earnings was pretty sweet. There's nothing here that we need to do. And that's all good to go. Yeah, let's look at UNG too. I just want to see here, Procter & Gamble. So Procter & Gamble looking to try to buy a pullback here on Procter & Gamble and marry it to a put. So still waiting for that to come back. Qualcomm earnings did a straddle 69.5, 69.5. We're at 67. So at this point, obviously this one's in the money. So let's get rid of that. So what I want to do here is anything that's there, okay, that's out. So again, anything that needs attention, I'm going to leave open. Anything that's fine, I just close. And that's how if you're going to trying to manage 20 positions here. So Starbucks, these are just straddles. That's fine. It's a longer term trade. SCTY, we've got in the money the $53 put. So that's fine. That's fine. So let's get rid of this. That's a good question. If there's a way to segregate your trades, short-term, long-term, I think you can do that manually. Like you can create groups and do that manually. All right, so that one's done. SPX, is there anything we need to do here? No. I'm going to leave this 1810, 1830 call spread on. I dumped the put because the stock market changed. This one will expire worthless. That's fine. And then the spiders, same thing. The call credit spread here looks like it'll expire worthless. That's perfect. Tesla, got something in the money here. So the 140 puts. So this was kind of a lotto ticket trade. Bought back the short side for a nickel, and then the long side just kind of popped higher, so got a little lucky on that one. Obviously, I don't have an interest in getting assigned or assigning, so let's dump that. And then, of course, the $20 calls that we sold, those are so worthless, worthless, worthless. That's perfect. So Tesla's done. And then Whole Foods, that was a fun one. Oh, looks like I got assigned 1,000 shares of stock. So the $70 call, that expired worthless. $65 put, I'm out, I got assigned. Okay, so this one I need to get out of. So Whole Foods is kind of over the last 2 weeks, Whole Foods was kind of that was the only real nasty earnings. Okay, so then we got 64 half call, 58 put. Looks like that one should be fine. And then, yeah, I don't really need to hold on to the stock, even though it may, let me look at it real quick, it may bounce. That's sometimes the thing you can do with earnings. If you hold on to the stock, then it doesn't, it doesn't expire. It's just kind of seeing like, okay, is this thing going to bounce or not? Well, yeah, I mean, it's at the 21 EMA, so I can give it a little bit of time, see if I can recoup some of that, so that's fine. All right, so all right, so Whole Foods is done, and then Zillow, that should be done as well. Yeah, nothing in the money there. Okay, so really at this point, just waiting for Groupon to see if this call. Oh boy, now it's rallying. The market's rallying here too, so I'm just going to get out of that. let's see if we're out of that. There. Okay. So now that's done. And if there's anything else I need to do there, nothing. Okay. So now it's kind of cleaned up, and now we can kind of start looking at, potential trades for next week. Okay, let's see here, and then I want to get this. All right, so now I just want to look at a couple of potential trades for next week. And the first thing I want to look at is just the S&Ps. Now, even though the market's been rallying, we've been selling call credit spreads every Friday on the S&Ps, I think for the last 5 weeks, and they keep expiring worthless. So that's fine, and we continue to beat a range, and we continue to have pretty decent resistance here. So let's take a look at that. Well, Shane, if it closes below 1747, then you have a top. If it doesn't, you don't. So at this point, yeah, that's not happening. So on the S&Ps, so if we go out to next week, what I wanted to do is look at, okay, so 23 points is one standard deviation. Add 10%, so let's round up to 25. 1766 plus 25 is going to take us to about 1790. So delta 14s. So 60-cent credit. And I think I'm going to go $10 wide here and see what that looks like. So dollar credit. All right, so that order is working. And call credit expires next week. All right, so now we got that set up, and now it's just kind of a matter of let's see. Okay, so that's working, and then the question is there anything else here that we want to look at, that we want to set up, et cetera, et cetera, and overall, I mean, CME and AZO look pretty good heading into next week. A lot of the other stuff, I mean, like Priceline actually might be kind of interesting for a spread. After its post-earnings move, things will probably get a little quiet. At this point, we're probably just going to get short covering into the close today. In fact, let's take a look at this. There go the ticks. Oh, 5-minute squeeze into the close. Nice. Didn't see that. So let's see if we can get a little scalp here into the close based on the ticks. See if we can get the first pullback here. So 5-minute squeeze into the close. I'd like to try to get a pullback. Yeah, Goldman Sachs looks interesting. It's a little mixed. If you look at Goldman Sachs here, I mean, it's got some good levels and good support. And if you look at a daily chart on Goldman Sachs, you've got kind of mixed waves, you know, B waves below zero, C waves above zero. I really like the setups where everything's just kind of in alignment. So you have like AZO, you know, it's like bam, C wave, bam, B wave, bam, A wave. So I really like AZO here to higher. Selling, and you know, you might look at this and say, oh God, it's so high, I don't want to do it. The secret to chasing is to not chase buying calls. You chase selling puts. You can chase all day long if you're selling. If you can chase a stock higher by selling puts, that's completely fine. Pack W, let's see. Yeah, I did get filled. Let's see. Yeah, there's a couple. Did I not enter that right? Yeah, the exchanges are doing really good. ICE, NYX, they're all doing solid. I mean, that's great. I mean, if I didn't already have CME, I would get ICE, but I already got CME. And the weekly chart, what really looks good on CME is the weekly chart. And then NYX also looks good here. I mean, all the exchanges here look good. You got to remember, when there's uncertainty and volatility, the exchanges do pretty sweet. Yeah, Juliet, you know, it is. It's just like harvesting a field of flowers. Yeah, so the main index trade that I'm looking at for next week is just selling the S&Ps. So we sold that S&P call credit spread. I'm going to wait. This you know, this market, I want to wait now and see just kind of where we are on, you know, Monday morning. We are just kind of getting let's see here. We are getting some short covering here into the close, so we might have a little bit of a scalping opportunity on that. Oh gosh, where'd this go? Let's see. So I'm going to keep an eye on this, keep an eye on the ticks. But that's about it. I mean, it's really just kind of seeing where, I mean, we talked a lot about just kind of like, hey, there's some potential for some cycles this week. Obviously, it didn't hit today. They still kind of drag into Monday, Tuesday, but, you know, if we would have gotten that close below 1747 today, it would have been a really sweet decline, which are always fun. I'm just going to buy some of the S&P futures here. Oh, no, not sell. No, 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 not sell, not sell. I'm just looking for some short covering here into the close. So on something like this where you've got, you know, oh, right there, okay. You've got, essentially you're just going to get something like this. You're just kind of set up for some short covering in the close. You got a little bit of a 5-minute squeeze here. So just see if we can get a little bit of a kind of a push into, what was the level I was looking at here? So not much resistance until about 1768. We're at 1764. Yeah, ICE is doing awesome here. And what else? Yeah, all the exchanges are doing really good. Yeah, so what we're going to do now, next week I'm going to be down, I'm dragging the kids down to the beach next week. And I'm going to be setting up some spreads Tuesday is an awesome day to kind of, Monday, kind of let the markets do their thing. Tuesday, what I'm going to be doing is Tuesday afternoon, then setting up some spreads for the rest of the week and seeing what this thing can do. At this point, though, the way the ticks are acting, I am looking for continued short covering into the close, and might try to sell one more call index spread into the close as well. I like that is actually great, Steve. That's great. So we're just kind of grinding higher, just kind of watching the ticks. I just kind of want to see where we close here, but at this point it's just kind of a grind, short covering bubble. It's just like seeing how it can do here. And in general, again, just kind of going through and looking at, in general, and I do this even when I'm traveling. My trading schedule looks something like this. Monday, try not to trade unless things are going crazy. Tuesday, set up weekly spreads in the afternoon. Wednesday, focus on weekly squeezes and bigger swings. Thursday, active in setting up weekly spreads for overnight theta decay. Friday, mostly manage positions, and so that's kind of it. So that's a general kind of a thing. So S&Ps are continue to push up higher. We're just going to continue to get short covering here into the close. Drunk on Friday. That's awesome. Yeah, I believe the markets are open. Are the markets open on Monday? I thought they were. Oh, so this is my general. So I don't like. So this is my general on Monday. Yeah, that's what I thought. Okay, bonds aren't. So it'll probably be pretty quiet. Okay. So this is my general schedule every week. So what I try to do is just kind of trying to balance out, mental capacity, but also this is what I find when my, trades work out the best. Monday, I try not to trade very much. It's going to, if the market gaps down 20 points, I'm going to take a look at it. But really setting up a lot, Tuesday is my, real day to kind of like dig in and start setting up trades. Wednesday, kind of pull back, focus on some of the like swing trades and things like that. Carolyn and the bigger timing positions on Carolyn's work. Thursday, fairly active in selling shorter term premium, and then Friday, really just trying to make sure nothing bad happens. How can I keep myself from trading? I love trading. It's one thing is like, if you're just being really busy, it's kind of like, oh, when you have 3 kids, you just kind of like, oh, you're right, I gotta. When I was not a father, it was a great, a lifestyle was, you go to Taco Bell, you trade during the day, go to Taco Bell, and then like play Call of Duty and trade at night. It was awesome. But at some point you have kids, you become a little more responsible. What do I think next week's going to look like? I honestly don't know. I was looking that we were going to have a high probability that we would top out this week. Obviously, we're not. The fact that bonds are getting crushed and gold is getting crushed and the dollar is going higher, that is changing the nature of the market, but it's not impacting the stock market, at least not yet. Maybe it will on Monday. So at this point, I just assume that stocks will go higher unless that level is taken out. If for some reason, Monday or Tuesday it gets taken out, but otherwise, don't want to fight it in any way, shape, or form. So good question. So how do I trade when traveling? So for the most part, I don't try to trade very much, although ironically the last 3 trips I've had have been amazing trading weeks. But it's not because I'm trading a lot. It's just that I trade fewer, have larger positions, and they've worked. But, yeah, I definitely, it's been the last 3 months have been kind of insane, crazy. So I want to go, next week, go hang out on the beach with the kids for a little bit, relax. I'll set up some trades. But yeah, I do want to, it is one of those times, it's kind of like you got to recharge. And one of the best things that you can do is in your own trading is take a little bit of a break from the markets too, because you're going to come back with a kind of a neutral, fresh perspective. Oh yeah, let's look at that. You could do that on NDX too. Well, the weirdest thing about this market is that there are some stocks that are just not acting right. Cena, I mean, this thing has been a great setup, but it's folding here. That's not a buy. UNG, i.e. natural gas. Let's look at actually the underlying here. So it did bounce off that fire line. Let me see the weekly, and then we'll look at the monthly. So we got a weekly squeeze. These weekly squeezes are legit. I mean, there's obviously a lot of support here in natural gas, and we got a monthly squeeze. So this could get pretty interesting in natural gas, for sure. And I keep waiting to see if crude oil is going to do anything interesting here. You can see we're still in the squeeze. For Cena, the safe trade on something like this is to sell a call credit spread. When in doubt, when it's not a clean setup to me, always take the safer trade. Yeah, I see how it does actually have a reversal pattern setting up, a falling wedge, but it obviously needs to break. That is actually a great question on LinkedIn. I'm still holding it, but let's take a look at that. So the LinkedIn Iron Condor is, I'm going to hold this, which is good since we have 4 minutes left. So the danger is the 210-205 one, right? I mean, obviously the 290, 295 is fine, the 180, 175 is fine, and we're at $215. We are within, we're inside of a 1 standard deviation move. If we look at this right here, this trade is down about $100 on that spread. So we could get out right now, sell, and obviously, we make money on the rest of it. I'm going to give it another day. And the reason for that, or another, collect some of that weekends on the weekend. But if we look at this on LinkedIn, just kind of watching it, I mean, we are at some support here. See if we can at least do a little bit of a retrace. And so I'm at least willing to give it. Now, if LinkedIn was falling today while the market was rallying, I'd just get out. Well, Shane, what 1 standard deviation? I mean, that's kind of a basic options concept, and yeah, we have a lot of stuff on that, and it's worth knowing. But yeah, you'll want to brush up. You can Google 1 and 2 standard deviations, and you want to brush up on some of that. That's some critical easy knowledge. Yeah, and it's all right. Here we go. So S&P's here pushing up. Push, push, push. So if we look at the 1 standard deviations for next week on the SPX, so Shane, this is where if you got TOS, they'll have them for you, just listed right on the platform, which is nice, makes it pretty easy. So the 1 standard deviation, so for next week on the S&Ps is going to be $33, then $39, $47, $54, and one of the things that I think there's going to be some huge support is the December monthlies. That's something that gets sold quite a bit. And let me see if I can find that. Nope, not there. But yeah, you always want to pay attention to those levels because those are the levels that the institutions will defend. Look at this. The S&P is just grinding it out here. And we're getting short covering, and there's not even high tick readings here. There we go. Buy programs hitting into the close. Yeah, we definitely wouldn't want 2 down days in a row. That would throw off this entire system. All right, we got 25 seconds. Let's try to scalp some of this out here. So we got the squeeze here that's triggered. Oh, nice. Thank you. Let's see. Active trader. Try to get some of these here. So we're still getting, it's getting a little bit of a push here. I'm just going to trail up a stop. God, it feels like Friday. I don't know about you guys. I'm beat. Okay, so let's do a... Okay, so out of that. So just a little 5-minute squeeze, pop into the close. No, absolutely, G-Trade. That's awesome. Matt, if you can get premium for Delta 15s on expiration date, that's fine. Yeah, that's the key. Is there any premium available? All right, guys. So yeah, it's a very fascinating market that we're in right now. So main stuff here is in terms of just the weekly charts. S&P is obviously in an uptrend here. Then we have Gold, gold's, I still think that we're setting up here for potential. I mean, we've got some support here in gold for sure. Keeping an eye on this. The gold's going to be an interesting one next week. Bonds got hammered. So I mean, it's going to be an eventful week. Continuing to sell premium continues to be the kind of the the easier route, and then there's some phenomenal trades or phenomenal moves like the weekly chart of Triple D. Henry's nailed that one. That's been awesome. I think even NVIDIA today, a little catch up there on NVIDIA. I love the exchanges here. So the thing about it is that even though I'm not a huge fan of the overall market, only because I'm seeing a lot of disparity within the market itself, like Tesla and all this kind of stuff, there's stocks out there I love. And so CME is one that I really like to the upside. And this kind of continues to be a stock picker's market. Obviously, the trend continues to be higher. But in the event that for some reason there's a sell-off, God forbid, the idea is to be in strong stocks that don't really care about that. All right? Well, yeah, if you guys are wondering, like elephants, this is an elephant trade right here. So, weekly squeeze, potential, and not a huge elephant. Let's call it maybe it's a hippo. But this thing has a good possibility of going to 85. 77 to 85 is a legit trade. And, there are stocks where, an elephant is more like, hey, here's a weekly squeeze. The ideal elephant trade is something like this, where it's like, wow, here's a stock at 30, you get into this trade, and the stock goes up, like 70%. That's huge in terms of options. That's when you can buy out-of-the-money calls and make a lot of money on it. So CME is not quite in that kind of a category right now, but that's what you're looking for. And what I've been waiting for, too, is for some of these, like, see if we could get some of this stuff like on some ETFs, et cetera, et cetera. But the main thing is between now, a lot of times people say, oh, okay, we're getting into the slow time of the year. We're through October. Through the holidays, it's kind of slow. It's actually one of the best times to trade. You get a lot of interesting opportunities here, so I'm definitely looking forward to the next couple of go-rounds in this market. No, so that's a great question. So Mark had just asked, are you concerned about the low open interest options? And I gotta say, the biggest misnomer in options trading, and you hear this a lot, and there's a couple of things out there that are taught that really frustrate me because it's not lies, it's just misinformation. And one of the biggest pieces of misinformation you can get is to not trade low or thin volume / open interest options. And now, the danger of it, the quote-unquote danger, if you go over here and you look at CME, I mean, I've done option trades where I'm the only open interest, and it was completely fine. The price you pay for it, though, is wider spreads. Now, remember, the other thing, too, if for some reason you can't get out, like if we look at this and say, okay, volume and open interest, and, we're looking at this going like, wow, there's not much, the thing about it is if you're long options, just exercise it. So you're going to say, you know what, just give me the stock. And then, so there are ways around it. Also, just remember, Theo price, even with the wide spread, you can get out of the Theo price, all right? Yeah, so Dr. Jim, my main thing for doing the wider strikes is to reduce the margin requirement. So generally, if you're doing a wider strike option, it's because you're considering doing a naked put or a naked call, but the margin requirement is so high, it's almost prohibitive because it'll prevent you from participating in other trades. So that's what you do there. Look at the weekly chart on AZO. It should be there. All right, guys, for those of you that are on the portfolio margin account, hold on just a moment. For those of you guys that are in the so room, have a great weekend. I will be doing updates from Cayman. I want to see, obviously, what these markets are going to be doing, and there's a couple of stocks like CME and stuff like that I really like, and we will see what these markets do next week. You guys enjoy Carolyn's class on Saturday. That should be a lot of fun. I will be on an airplane. But that should be good. You guys have a great weekend, and we'll see you at the next update. And then, so for you guys on for the portfolio margin class, so what I wanted to see is okay, so Hector, for your question. So, Hector, we've been talking about this all week. So what do you think? What do you think I sold in terms of the SPX? And one of the strategies that we talked about all week is selling one standard deviation credit spreads. Right. So that's what everybody had picked up. Exactly. So Hector, that's kind of the basic thing we've been teaching all week. So if you're looking to sell a call credit spread on something, you're just going to go out one standard deviation. So hopefully at this point that's something that you're able to do on your own. Mm-hmm. 1790. Yeah, that looks great. That's perfect. Rick, John, could we get your thoughts on the TOS 8-to-1 risk-reward earnings calendar trade idea from yesterday if we get a chance? Yeah, no, Rick, and I don't do a lot of calendars, but that is a strategy that you can do with that. And, especially if you get like a 5-cent debit on something like that. Yeah, no, that makes sense, Hector. Yeah, so what you do is you just go out one standard deviation, that's the one that you sell, and then just buy the next one above it as protection. Do you interpret the C, B, and A waves for things like natural gas and crude oil in relation to the squeeze? The waves on some time frames are down. Yeah, in general, David, the best trades are when the waves are all in conjunction. So if the waves are all up, like here on AZO, generally if there's a squeeze, you want to see the cleanest trades are when they're all in alignment. And if they're not in alignment, a lot of times I just pass or I'll sell. So as an example here, that when you see something like this and they're all in alignment, up, 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 great, I'll buy some calls. But if they're not, if I still like it, but it's like, boy, the B wave's down, but the C wave's up, then I'm going to sell one standard deviation puts. So really, if they're all in alignment, that it gives you an idea of how aggressive you can be. No, you can actually, like natural gas, crude oil. I mean, right now, natural gas has been kind of sloppy, but we had a really sweet, there was a sweet setup on crude oil not too long ago. Gosh, where was that one? Back in there. But you just want to watch, and like here, so this is a good example. So on this one, I took this as a long trade on crude oil, but you can see that, wow, the C-wave is below zero. I just thought I was watching this, and I thought it would go higher, so what I did is I just sold puts in case I was wrong. This is not, and I did it with small size. This is not what I would call, a great setup, but it was a squeeze. Simon's asking, what is the exit plan? So the exit plan is going to be just using the ATRs that we gave you today. So what you want to do is your initial stops will be 2 ATRs, okay, and I'll post these notes for you. And then you're going to have targets of 1 ATR, move up your stop, et cetera, all right? And that's a good plan to follow on any directional trades that you're in. Yeah, some of these are kind of crazy. Yeah, copper's got this pretty intense squeeze going on right now. So if you look at this, weekly chart and then the daily chart's even longer. The main thing with this is actually this is one of those where I think it's actually a good straddle buying opportunity. It's kind of difficult to do with. I mean, you could do that with futures options, but some of these squeezes that go on and on and on generally result in a fairly big move. Yeah, no, and Steve he's saying like this course is the best I've participated in so far, and I've done quite a few. Changing to a portfolio margin account changes everything. Yeah, here's the the interesting thing, Steve, and you just hit the nail on the head. With a portfolio margin account, everybody assumes that that is a way to be more aggressive, and it's not. It's a way to be more conservative. I don't know if there is an ETF for copper. Do you guys know of one? Yeah, so what I would suggest, guys, from here, so for those of you, if you are not in our trading room, I would suggest doing it like for a month. I mean, it's very reasonable. It's like 140 bucks or whatever it is. But that will give you, what you'll do then is you can go in our trading room and just and ask questions. Because what I want you guys to do is you're going to start setting up trades like this. Now, if you have questions, you can just email me too. And I know some of you don't trade full, you're working and stuff like that, so the room doesn't make sense. But I would suggest that if there's any indicators that you saw I liked, I would suggest, kind of setting those up. You may want to switch brokers to Thinkorswim. You may want to set up some other charts. But just kind of take your time, take a deep breath, get your stuff set up. And we will look at what I'd like you guys to do is just send me some emails with any questions or with any follow-up. We'll get all the notes posted and the additional charts, and you'll be good to go there. And in a nutshell, just remember that you can make a living just following the momentum of the squeeze. Okay, no matter what you're trading. Even if we look at let's look at Cena. Well, there's not a lot of. Well, here's a good example though of an elephant trade. This is. With a weekly squeeze, this is a possibility where you get a stock that goes up more than 100%. You can make a freaking killing on this. Now, the problem, of course, is you never know which weekly squeeze is going to do that, right? But we do know that it's a probability, and that's why on weekly squeezes I'm willing to do some directional trades with the idea that we could actually catch something that was pretty awesome. Yeah, so TOS does not have options on everything. Mm-hmm. All right, so here's what I'd like you guys to do in the class, or from the portfolio margin class. go through the notes this weekend, kind of add notes in your trading plan, and then just shoot me an email if you guys have any questions. I will be out next week on vacation, but I will kind of be checking in emails occasionally and also get caught up. But I just want you guys to start looking at this in terms of, utilizing portfolio margin in such a way as to be able to trade more effectively, more consistently. And, squeezes, and in its basic form, just remember that a squeeze represents the possibility of a pretty huge move. What kind of option trades can you take on that? Be patient for those kind of trades. And then the end of the squeeze is also an opportunity to make some money with a portfolio margin account. All right? So just kind of keep that in mind. And as you're seeing setups and stuff like that, just kind of let me know. But remember, the nice thing about selling one standard deviation premium is it is very forgiving. You can screw up and you can still make money. So just kind of keep that in mind. Don't try to make a killing, just try to make a living, and then the rest will take care of itself. Yeah, we will post the notes. Oh, 5:20, man. Have a good night, Simon. So what I'm gonna do, guys, is we'll sign off. Again, if you have any questions on any of the indicators, anything like that, you can give us a shout at the office. I'm gonna start updating the notes so you guys can have the most updated notes over the week. And I want to thank you guys for hanging out over the last 3 days and on Saturday. And it's my hope that you're able to take the information from here and just be able to do this, more consistently, kind of open your eyes up to some possibilities, and just being able to do this for a living. All right? Ta-ta. Awesome, Candy. That's great to know. Yeah, absolutely. Absolutely, Candy. Absolutely, David. That's awesome, Rick. Good to know. Hi, son. Thank you. Awesome. I guess that is my own favorite word, isn't it? Gracias. Yeah, and you guys have an awesome next week, too. Just kind of remember, you guys have a lot of new margin on this. Just trade small. You don't want to wake up on Monday full of confidence and start trading crazy. Just trade small. Take a deep breath. It'll all come together. I'm a Texas fan kind of by default. I did end up graduating from UT. See if Mac Brown can survive the year. All right, guys. Thanks. Well, you guys have a great weekend, and look forward to any questions you guys have and any follow-up. Just take some time. Remember, don't make this too complicated. It is not complicated. If your trading plan is 14 pages, cut it down to 2. This can be very simple. You don't need to overthink it. And start off small. As you gain more confidence, you can add a little bit more size. But there's no need to go crazy. All right. I think Aria. All right, guys. Have an awesome weekend. And for those of you in the room, see you there next time I'm in there. And don't bet too much on the Longhorn game. Have a good one.
The